Finally, here it is, guys. SoFi Q4 earnings actually came out, and no wonder Anthony Noto was buying that whole time. It lived up to all my expectations, if not more, whenever we're actually looking at profitability. Now, if you're a numbers junkie like me, then the actual transcripts of the earnings calls are so much more important than just listening to it, because it's so hard to actually conceptualize every single number that they're telling you. And instead of me waiting 48 to 72 hours for like a motley fool to post the earnings scripts, Seeking Alpha actually posts it in less than 3 hours after the actual earnings call finished up. That speed to post is such an advantage for investors, and it's exactly why I've been partnering with them for a long time. So go check out in the description down below to find your promo code for Seeking Alpha and get all your transcripts that much earlier to beat the competition. A portion of every subscription actually goes to supporting me, so it's the best way to support me, and then I can do things like improve my microphones and, get new cameras, new setups, and everything along these lines. Starting with members, we saw a quarterly new add to the total amount of members by 479,860 people. Now, normally, I would not say the entire number there, but the funniest thing was that on the SoFi Weekly podcast that happened a week before, whenever all of the members of the SoFi Weekly podcast actually did a prediction on the actual amount of members that would come out, I nailed it on the head with 479,000 as my prediction. And that's why I tell you guys that I'm the #1 SoFi creator. But aside from just patting myself on the back, what we also saw was 695,000 quarterly new product ads, which means that obviously, like every other quarter, there's more products. People are buying more products with us. Like maybe they have a SoFi Money account, they have a SoFi Invest account, and then potentially even a personal loan. That would be 3 products for just 1 member. But the interesting part here is that members grew by 51% year over year, but products grew by 53% year over year, making the actual speed at which more people are cross-selling into multiple products actually faster than the amount that we're actually making new members. Meaning that the ratio is getting better and that people are actually cross-selling into other things, which is the flywheel that Anthony Noto has always wanted to create, and it's obviously working. This has given us another amazing record quarter of revenue at $443 million, up 58% year over year, and also faster than the amount of people that we're actually adding onto the platform, which means monetization is getting up. But the only way to really explain monetization is looking at adjusted EBITDA of $70 million, up, wait for it, 1,530% year over year. Obviously, that was before we had a bank charter, but let's even things out. Just quarter over quarter, that is still up 58%, and then also beat on expectations by 56%, which is just unbelievable. This just goes to show you the amazing effects that a bank charter can have on this stock, and it's a really great path to profitability. It might come a lot quicker than we think. More on that later. But this is nearly, if we were to add up Q1, Q2, and Q3 of this year, would almost be the same amount of EBITDA that we saw in just this single quarter. Think about that for a second. Unbelievable. That all happened while not even getting a portion of our business back, which we were supposed to see through student loans, which we just didn't, and yet we still beat by 56%. And due to a lot of non-cash charges to the business, like stock-based compensation, for example, we still saw $40 million of net losses on the company. But that was roughly half of what we saw just last quarter. So that road to profitability, like I said, is being paved very quickly. Due to this, earnings per share actually came in at -5 cents per share rather than the -9 cents per share that we actually guided for. I can't understate how important this is. I even said this on the SoFi Weekly podcast last week. I said profitability will be the #1 most important metric this quarter, and that's exactly what they're showing. But whenever we look a little bit deeper into the business, just starting with financial services, we saw a lot of really great things. SoFi Money members actually increased 53% year over year to over 2.2 million members. And given the quality of these members, around 745 FICO scores on average, that means that the cross-selling into other products like credit cards and personal loans are so easy because they're good borrowers. This is probably also why we're seeing more signups in credit cards right now, even more than last quarter, up to 17,000 new members, which is absolutely amazing. In total though, just going back to SoFi Money, whenever we actually collected deposits from people putting money in the checking and savings accounts, we saw an increase of $2.3 billion just quarter over quarter, up to $7.3 billion in total deposits. The growth here is unbelievable, and considering the fact that every other bank has shown massive decreases in their deposits going forward, seeing SoFi Money absolutely crank it out of the park here is really, really good signs. Just think about this statistic that they said 50% of SoFi members go direct deposit within their first 30 days. Now let's go a little bit deeper into deposits, as they're technically a liability to banks. So why would we want it? They're a liability because we're promising to pay 3.75% to everyone that uses our saving accounts. Okay, Okay, so if that just gets poured in, what are we going to do with their money to actually go and reinvest it and try to earn a higher amount? Right now, what we're doing is personal loans, student loans, home loans, all the sort of lending products. We charge much higher interest rates on these products, roughly around 14 to 15%, and then we get to keep the spread of that engagement. But what we used to do before we actually had deposits, like most other lending companies, is they would go to what's called warehouse facilities, which is like a big corporate credit card where they can actually have their own debt. Anthony Noto brought up the fact that we have a 1.9% spread on the difference between warehouse facilities and our cost of funding, which means we save all of that money. And so that's the benefit of actually having these deposits. Last quarter, it was only 125% spread. So knowing that that spread is actually increasing means that our margins on our business are greatly increasing, means we're getting stronger as time goes on. Looking at financial services a little bit more broadly, revenue actually tripled year over year to $64 million and grew 32% quarter over quarter. He also brought up that annualized average revenue per product has actually grown to $40. Okay, this is up almost double from $21 of last year. So just think about this for a second. Products are actually growing faster than members, and that's actually happening at a faster speed. And now we're actually improving the monetization per product on our financial services side. Just think about how that progresses going forward, right? If we can continue to increase the monetization and people cross-selling, it's an amazing flywheel that Anthony Noto has created. For our technology platform, meaning both Galileo and Technisys, whenever we talk about Galileo, they signed 11 new contracts in a single quarter, which is crazy because we barely heard about even one of them. I thought it was going to be extremely slow. But yet 36% of these deals were B2B, with another 27% of the deals actually being out of the United States, which means we're really going internationally, and I'm sure this is actually in Latin America. But most importantly, they say 9 out of the 11 deals that were actually signed already have mature client bases, which means we don't have to grow, new client bases like this. They are already established and are now just going to be offering Galileo cards for us to be able to just ship out to all of their client bases. It also goes to show you that if they have mature organizations already, that we are beating out a lot of the competition whenever we actually go to the sales table, right? So this is what's really showing the innovative side of our company. And then whenever you double that with the idea that Galileo signed 16 new clients, okay, with their first sale actually being in Mexico, how many of those clients are actually cross-sold to Galileo? That's what they did not touch on, and what I would like a little bit more insight on. Like, are these 16 new clients people that we were already Galileo clients with, and now we're sort of selling the bundle? In terms of lending, it's exactly what you would assume, right? Personal loans are doing unbelievably great, while home loans and student loans are kind of not doing well at all. This is exactly what I had predicted in my last video, just simply because the moratorium for the, student loan pause actually got extended, so no student loans are going to want to be refinanced. And then home loans, the market is absolutely crap, and, house prices are dropping, so there's not going to be a lot of competition for that as well. Now, doubling up on that idea, we actually are losing our partner Lower.com. This is just a speculation, by the way. I just want to note, it's not actually saying that that is the partner that they're saying is copping out on us. However, doing a little bit of deeper dives, I do believe that it is Lower.com and not Pagaya and some of these things that people are trying to assume. This home loan provider, as Anthony Noto says, is switching their platform and bringing the costs all to SoFi, making us pay for the deal, and Anthony Noto is having none of it. So they want to actually build it internally like they do have with personal loans and student loans, which allows incredible flexibility and the highest amount of earnings that we could possibly achieve. They said they are working on this and considering acquisitions if needed, but aside from that, this could absolutely revolutionize our home loans if we can actually bring on that same quality that we're seeing on our personal loan side. Just some other noteworthy things that I saw in no particular order that I just wanted to add into the video. There was a $50 million increase on our tangible book value that we saw in this quarter alone, which just sort of helps with our price to book ratio. And on the quality of the people that we're actually giving loans out to on our lending side, the actual average income is still $165,000 on our personal loan side, as well as an average FICO score of 747, meaning that these people are very good borrowers to give out to, and even higher to than, some really, really high looked at borrowers like Lending Club. We even go above and beyond them. And of course, that leads us to an annualized personal charge-off rate of 2.47%, which is really, really good for our company right now. And they do expect that to rise to more pre-pandemic levels, but still, they are putting that into their expectations, so there should be no uncertainty going forward. And due to these high-quality borrowers paying a lot for our personal loans, our net interest income is spiking working, and it's also leading to a 109% increase in our actual interest earning assets, which is just unbelievable. Even our average net interest margin went up to 5.94%, which increased by 1.91% just year over year. That is absolutely incredible. And I don't mean 1.9% of 5.9. I mean like literally 1.9%. Just crazy. SoFi has shown time and time and time again that we're able to differentiate, monetize, and adapt to any sort of situation that gets thrown at us. Imagine just if for once we had stopped getting actual headwinds and we start getting tailwinds for our business, which will happen, mind you, especially whenever you're a regulated bank. The actual amount of regulations that go against you are few and far between. So if there are any regulatory changes for other fintechs out there, we do not apply. Student loans will come back eventually, and whenever that happens, it will be the glory days for SoFi. I'm telling you, I'm very, very excited. That's what I love here. It's the full picture. Like imagine having beat earnings per share from going -9 cents to -5 cents. Such an amazing beat. And then not only that, but also increasing the amount of members that you were expecting, 400,000 to 480,000. That's a 20% increase. Also on the amount of members while still focusing on actual monetization and actual profitability. You're not even worried about these members, right? And yet you still actually got those numbers even though you were focused on the complete opposite. And the big bear cases that we used to see are going away. We saw the lowest stock-based compensation that we've ever seen since Q2 of 2021, which is $70 million or only 16% of revenue. And this all happened while innovating on a ton of new products this year. And actually just in this quarter, we even lowered our actual, acquisition per user that we wanted to bring on to $344 per person. Still high whenever you compare it to other fintechs, but they don't monetize like us. Like $40 per average product on a financial services side is absolutely amazing. But then forward guidance came out, right? And then you gave bears another thing to talk about because they're always just way too conservative. Like boast for a little bit. I mean, people believe you now. You have credit execution on your side, Anthony Noto. Like you've done double or triple beats since this quarter or since this company has been a public company. But no, they're expecting a little bit less revenue next quarter and then roughly a 40% cut in EBITDA next quarter, which if you look at their actual trend, does not look like it's going to be the case at all. But then they give a little bit of insight on how they actually get this guidance, and it does actually seem very good. So whenever you look at their delinquency rates and all of these sorts of things, you know that it's not going to be increasing extremely high because of things, well, first, provision from credit losses, which are actually going down. But secondly, because they're expecting small conservative things like 2 small rate hikes from the Fed, and then following in the back half of 2023, 2 small cuts from the Fed as well, which seems to be across the board what all the big banks are saying as well. In their guidance, they are expecting student loans to return back in September of 2023. However, they did say very excitingly that Q4 of 2023 is when they expect to get GAAP profitable. So the big, scary, unprofitable company statement is supposedly going away by this time next year. But Anthony Noto has said it best. None of this happens without the faith of our shareholders, the persistent and unrelenting resolve of our people, and a team that has done the extraordinary. SoFi continues to be the best positioned company to be the winner that takes most in the digital financial services sector. Unbelievable and so exciting to see this. But if you guys have enjoyed all of these recaps of SoFi stock that is up over 50% in just the last month, please, I'd appreciate a like and subscribe down below if you haven't already. Bye for now.